Let us look at auditing standard number 570, which is talking about going concern concept. So when we are doing an audit and we're coming across events which is giving a doubt in the mind of the auditor, like in our mind, that the concern may not be a going concern. So what do we do in that scenario? So what are the procedures, additional procedures that we need to perform in order to convince ourselves that the concern is a going concern? So it's a very important understanding from the point of view of the investors. We need to let them know if the company is profitable and if it's going to be going successful. So what are the 5 procedures? It's simple. So the first one is we ask the management to do an assessment of its current scenario, right, and give us a report. And the second one is we ask management to give their plan for the future, and we evaluate it in detail and also see if it is feasible. Whatever has been put down in their plan for the next 6 months or for the next 12 months, it is actually feasible, and it is going to change the situation in which the company is currently operating. And the third one is the cash flow forecast. So all the companies are required to make an estimate of their profitability and their cash flow, and the situation, the balance sheet and everything. So we are going to evaluate that and all of the assumptions the company has taken and what are the information they have taken to perform these cash flow forecasts. So all these are going to be evaluated in detail. And the next one is, like, as I said, the first point, going back to the first point about the management assessment. So the management is required to give us an assessment report. So now, say the management prepared the report on 1st of January, and we are on say 1st of May. So since that time of the report time, has there been any significant changes in the company? Any situation? Has it faced any debt, or has it been required to pay some huge fine or any big loss? So we have to take into consideration all these happenings after the date on which the report was prepared. And the last one is obtaining written representations. So from the management or from people who are charged with governance, we can obtain written representations. So they have to tell us the truth, and they have to tell us what's their plan and what is the feasibility of the plan and how is it going to work and how is it going to let the company keep running with good profits. So all these we have to collect the information, and yeah, and then we have to decide if the company is actually going to be a going concern or if it's going to be closed very soon because of the operations.